After a lot of research, I want to introduce to you AT 2020. It's an update of AT 2019, which is in the stock index portfolio. And I want to show you the details of this. This tests well back to 1997. Here are the stats. Without slippage and commission, $104 average trade profit. Excellent for a day trade strategy. The original version was developed in 2001. And so you see long history. And most recently, it's been since over the past year, it's been down. So I like it when a strategy's been down for a while and it has a long history, because if you look at what happens after this is down, then you get a run up, and when it's down here, it goes up a little bit, it's down a little bit more, and then you get a run up. I'm not saying that it's going to run up right away. It could run up or go down a little bit more or go sideways longer. It might not turn upwards for another year. It's just one of many 30 algos in our stock index portfolio. So you don't have to put all your hopes on one strategy. But I do have this update for this strategy. And let's see, the worst case drawdown is in 1999. Here is the statistics. We already looked at those. 117, 8, 12, 50. I'm going to show you what we came from. And I'm going to show you with slippage and without, with slippage and commission and without. And you will need to request this update. Not everyone wants the update. Sometimes you guys set this up and you don't want more files coming your way than you know what to do with. So if you have the stock index portfolio and you want this update, request it from us. You can have it. I'm going to show you the details of how it changes the portfolio as well as the results. So if you look at the statistics as well as the changes, AT 2019, this is with slippage and commission. These are the numbers with slippage and commission. We looked at the best case scenario, the latest version without slippage and commission. Here is the old version without slippage and commission. You see the average trade profit goes up about $35, $33, $33.50. The drawdown is cut in half. The total net profit goes up. The percentage profitability goes down. And here it is with slippage and commission. It's at 50,700 versus 89,612.50. The drawdown is cut in half. Average trade profit goes up quite a bit, $35 or so, $34. The trade amount, number of trades is about the same. Winning percentage goes down because we add a break-even stop loss. And the profit factors are where they are. These are day trade strategies. I don't expect high profit factors on day trade strategies. We're focused on the net profit after slippage and commission. And if there is net profit, then and it merges with our portfolio, then that is what we want. Some of the changes that are included: we removed one of the rules from the short trades for the entry. So there's really only one rule: the time that it enters, and then one rule, and that's it. And there was two rules before, and so we've actually simplified the short side on the entry, and most of these changes are on the exit. So we added a break-even stop loss to short trades, $450. Short side gets reversed quickly, and it either goes or it doesn't. So we added a break-even on the short side. This is a strategy that has different entry and exit rules for longs and shorts. Most of our strategies are pretty balanced, pretty equivalent between longs and shorts, but this one is different, and the exits are also different. So we had the option for a fixed stop loss. We have a range-based stop loss, and I'll speak more about that in a minute. It exits at 4 p.m. instead of 4:14 p.m. And we add the don't trade on holiday, so it won't trade on holiday shortened sessions, and it won't trade on days when the stock market is closed but the futures are open. We changed R from 5 to 8.8. So the stop loss is right now is equal to the R times the average range of 27. The reason we use 27 is because there are 27 15-minute bars in a day. So we didn't optimize that number. We just wanted the number of bars in a number of 15-minute bars in a day, because we're trading on 15-minute charts. So 27 15-minute bars, and it's 5 times the average range of those times the point value. That's how the stop loss is calculated. And we changed it from 5 to 8.8, which is a very big number. and you can use you have the option to add a fixed stop loss, and the optimal fixed stop loss to use there is $1,900. So this has a fairly big stop loss, but you don't get chopped up as much either. So we have strategies with tighter stop losses, strategy with larger stop losses, a diversity of exits. Focus on the max drawdown over the individual daily stop loss. So that's what you should be most concerned about, is the max drawdown. And any given day, you could be stopped out on a big loss on one strategy, but we're trading multiple strategies, and we're focused on max drawdown more than individual strategy performance. Next, I'm going to show you how it works in the portfolio. Believe it or not, this is the tricky thing about portfolio analysis, is most people don't realize that you don't want to create a portfolio that has you optimize each system. We've improved this some, but it's how these strategies work together, and not just creating a bunch of optimal strategies and throwing them together. You have to consider how these strategies work together. I want trend and counter trend and mean reversion. I want strategies that are in a run up, and I want strategies that are in a drawdown. And this strategy is in a drawdown. But when we take out AT 2019 right here, the drawdown for this portfolio is 30,402.50 on an end of day basis. When you take out AT 2019, it goes up because AT 2019 did so well in 2009. Here is where we're talking about 2009 back here. So this is kind of a one-off. Everything else after this is below 30,000. But AT 2019 did so well in 2009. It's an unusual environment. When we add this, add AT 2020 back, add it 2020 back to it, the drawdown goes back down, but it was 30,000 before. So even though we improved this strategy, the drawdown was higher in 2009. And since that's really just one event, and the average trade profit goes up so much, I'm okay with it. This drawdown is 28, and this drawdown is in the $28,000 range, while on the AT 2019 these drawdowns are at the $30,000 range. And then you also improve the average trade profit on this. So, this is 29,352. So it's about 30,000 with 2019, with the 2019 strategy. So this 2009 increases by 3,000, but I'm more interested in the current market environment instead of the 2009 environment and having a higher average trade profit. So even though the drawdown goes up a little bit in 2009 by 3,000, it's still a valid update to me because the average trade profit goes up so much, and average trade profit is one of the most important things in the portfolio. And individual strategy drawdown, I like that. And these other drawdowns, when you compare these other drawdowns, they are slightly lower than AT 2019. So this is an exhaustive analysis of this update. I don't normally give this much information on an update, but I've showed you what I've changed. I show you how it changes the portfolio. I've shared with you my rationale for making these for making those changes, and some of the portfolio analysis tips. Once again, you could just get 10 of your favorite strategies, optimize the daylights out of them, throw them in a portfolio, create a beautiful equity curve, and then when they fall apart, you'll know why, because you didn't have enough diversity. And so this is what we seek. We seek diversity of entries, diversity of exits, diversity of cycles, and where they are on the drawdown curve. So this is the stock index portfolio. If you want this strategy, the best deal is to you can subscribe on the website AT 2020 and get this individual strategy. But what I would recommend is you trade it in a stock index portfolio. You can start with the micros and then work your way up, or you can start with the minis. You need about 10K to trade the micros and about 100K to trade the minis in this portfolio configuration of 30 strategies. So you see that number there. That is the account size minimum. So that's the minis. 1/10 of this number for the micros. If you're trading one micro, all these numbers are 1/10. So max drawdown 3,300. Account size required is 9,800, about 10,000, and your total net profit is about 70,000 over over a 10-year period instead of 705,000. So you can start with a micro and you can scale from there, or you can start with the minis depending on your capital, how much capital you have. But you can find this on the stock index portfolio. If you go here to the website, Market Portfolios, and you go to right here, Stock Index Portfolio. This is where you can subscribe and get all 30 algorithms that we're talking about, learn more about it, and I will be updating this report. And it looks like if the market stays where it's at today with about an hour to the close, we'll be at equity peaks on the stock index portfolio, so that's good news. And you can subscribe right down here. $9.95 to get all 30 strategies for up to 2 micros. $49.50 to get all 30 strategies for up to 4 E-minis. If you have, this, you could trade in a $1 million account with 4 E-minis. You probably wouldn't want to trade 4 E-minis with, just a $100,000 account. But you could trade 1 E-mini with $100,000. But as you increase your capitalization, most people typically deleverage, and so it's suitable to trade. Think about trading 4 of these on a $1 million account, and for example, plus 76K right there would be plus 300K. You'd be up 30% on a $1 million portfolio if you traded 4 E-minis with a stock index portfolio with these 30 strategies. Your risk would be 120K, roughly about 12%. So that's the update for the stock index portfolio. And AT 2020, the update. If you want that update and you have the stock index portfolio, message me. I'll send that out to you. I'm not Microsoft. I can't automatically push these updates out. And so message me and I'll be glad to send you the update.